video, and it's Saturday the 4th of January. So Happy New Year to you all, and also the start of a new decade. I thought I'd like to start some historical perspective this morning, and what better perspective than this chart of the Roman denarius. This shows the silver content of the Roman denarius from around 64 AD to around 268 AD. What happens with empires, with companies, with governments, is that they tend to do pretty well to start with. They have a following wind, as it were. Things go very well. I mean, the Roman Empire was plundering and doing its thing for hundreds of years, bringing lots of cash into the empire. But all these things reach a peak, and then they need to be funded. So this is where the banksters come in, and obviously throughout the ages we've had banksters lending money to governments to plunder and pillage and do their own thing. And they all have security. I mean, governments or kings have lots of land to offer for security. So the banksters have this, they can't really lose necessarily, although of course they do from time to time. The Romans simply removed the silver content from the denarius. Quite an interesting little trick, really, sleight of hand. People thought they were getting the real thing, but in fact it wasn't quite the real thing anymore, and eventually down in 268 there was virtually no silver left at all, and that marked the end of the Roman Empire, in fact. And I think we're going through a similar process now with the US dollar, which is somewhere down this road. I'll dig up a chart in a minute to see what's happening, but I think we're near the end of the sequence rather than near the beginning of the sequence. So of course you see the US flexing muscles against an increasingly hostile world. It's not really a terribly good place to be, but I think, as I say, I think this probably is a good historical perspective of where we are today. When we take this table from the balance.com, we see that in 1913, base year, $100 for $100. 100 years later, 2018, it's gone down 96%. So now you need $2,500 to equate with $100 back then. So, I mean, the Roman denarius did something similar over a 200-year period. Dollars done something similar over a 100-year period. Okay, we had the printing press eroding for World War I. Then the Great Depression redressed the balance to an extent. Then we had World War II inflation. Then we had recessions, which again adjusted slightly. Then we had end of the gold standard was a biggie. Reaganomics was not terribly good, etc., etc. You get the idea. It's a policy. It's a major trend affecting our lives, so the value of our cash gets distorted. It tends to lead to wars, and it's just generally a very bad thing for the economy. So 10 years ago, a guy called Satoshi decided to do something about this, and he decided to create his own currency. Now I did this, and I decided to print out some, £1 million Piper pound notes. Go to the printers, print out say 100 of these things, but it wouldn't have much effect because nobody would want to accept my Piper pounds in £1 million denomination. Satoshi was a bit more intelligent about it and created Bitcoin, created miners, and once you start working for something, then it gives it a value, even if only in your own standards. 10 years later, we have Bitcoin at $7,000 odd, which we're looking at in a minute, and we see this as an alternative currency, which is a more soundly based construction. We also have Karatbars doing something similar. In fact, I mean, Karatbars. I'm involved in Bitcoin. In 2018, I think it was, I got involved with Karatbars and KBC. This is a brave experiment of a similar type, trying to back a cryptocurrency with gold. It's had its ups and downs. It's like a soap opera, but we're doing well at the moment. We took some profits, and it's a good project. I think a very interesting project, and this is all part of the same thing. Really, it's all part of the depreciation of the currencies, and how to handle that and how to thrive against the situation where the governments have gone a bit berserk in printing up cash. This is a chart of Bitcoin over the last year. It's a daily chart. So we started the year at 4,000 and we ended the year around 7,000. So the bull might say, what a great year, we're up 75%, making it one of the best performing asset classes on the planet over the last year. The bear might say, on the other hand, well, we're at 14,000, we're now down to 7,000. My God, we've halved. It's a disaster. I mean, you can take your own view, I guess. Personally, it looks to me like between a 1 and a possible 2, a 1 and a 2, and that we may now finally see the bottom, and we're going to go up from here. Maybe I'm optimistic. We'll look at the chart in a second. Certainly, we need a break above this line here, really, I think. So if we get above 9,000, that will tend to confirm that we have seen an important low, that we are now going up. Certainly, it's about time. We have a pretty clear 5-wave advance here. I've discussed this pretty thoroughly from the 3,000 low back in December 2019. This looks like definitely looks like a corrective move, whatever else it might be. So let's have a look down at the action since the low. We saw the low around the 18th December, and 4:30 or thereabouts. I count 5 ways up to here. Fairly clear count that the 1 and the 2 are rather rather lost in the mix, as it were. There's a 1, 2 there, possible 5 there, a bigger 4 and a bigger 5, but yeah, there's a possible 5 there. Could be an ABC, of course, but we have now got an ABC decline, suggesting that we may have seen the impulsive move up, and that's found support at the Fibonacci 61% level with a decent thrust up, which could be a wave 1 of the next leg up. Not definite. I mean, this could be an A move, A wave. So this rally could be an A B, and so we might just see a C. Depends how it goes. But certainly we have the beginnings of something, or possibly the beginnings of something. And I'm setting a move above 7.7. To see whether the head of steam develops. I think the US attack on Iran is probably helping. General background of the US dollar fading, and the other fiat currencies doing the same is positive for Bitcoin. Certainly a lot of Iranians going to be buying BTC over the last few days. Did read a report it went up to $29,000 in Iran on a fairly small exchange. It should be a new all-time high for it, I guess, although there may be some similar currencies in the past. Similarly, we can turn to gold. It's another daily chart. We now have confirmation that the correction is over, and up we go. Wave counts, see that's a 1 and a 2. I think probably 1, 2. This is wave 3 coming in, 3 of 3. That's been my sort of longer term count. There are variations on this theme, but that's really how I see this, that we are now due a solid thrust up, which has begun. I've been recommending gold for some months now. I think right back to this low down here, I think we caught quite well. Nice spike down there. Anyway, so as you will know, I'm loaded up with ETFs, gold stocks, bullion, etc. I say loaded up. There's not huge amounts, but I've got a certain quantity, and look forward to this ride. I will be adding some thread bedding once we see a correction to the current move on silver also. Silver is similar. Basically saw the low back in November 2018. So we've got a 1, 2. I think this is a 1 of 3 again. This could be a 4, but I think it's probably more likely to be a 2. Almost at the 61.8% level, not quite. And now I've got an impulsive rally up, suggesting that low is actually in. Let's look at that in a bit more detail. Okay, so on the 30-minute charts, we have the 1 wave, 2 perhaps. This could be a 3 to here, I guess. Possible 4. So we could actually be close to a peak. I mean, the peak could be in of this wave 1, so we could be due a correction at this point. Remains to be seen how that pans out. But that covers, I think, the easier markets where we have sort of pretty clear reasons for rallies to continue. And go on to the equities now. Right, along with everything else, of course, we have an election year this year in the US, November election. Plus, we've got a very positive pattern. 1, 2, and 5 wave move here. 1, 2, 3, regular 4, 5. So it's possible actually we are due a correction here to correct the move off this level here. So that could last. That route's been with us for 3 months plus now. So it could be due a month of downside on the equities in the US before we see more upside later on. Let's look at the shorter term here. Okay, so from this peak we had a pretty solid 500 point sell off thereabouts with a sort of 50% plus retracement. The high may not be in for this yet, but it's looking certain that, well, not certain, things are certain, but it's looking likely we're going to see a C wave decline at the least. That could just be the wave A of a bigger ABC. So I think I'd expect the Dow to be seeing a negative trend for a few weeks at this point. FTSE ditto, we had this 5-year advance. Looks like we've now got an A, a B, and a C wave to come in and sell off. So that's going to, I mean, the Dow and FTSE seem to be seeing some kind of harmony at the moment. I think I'll call it a day at this point. It's been quite a long report. I've covered a few areas I wouldn't normally touch on, which is a longer term report, really, given the fact we are at the beginning of this new decade, with a lot happening with the election and the currency situation, etc., etc. Anyway, hope you found this useful. Back to the report for subscribers on Tuesday. Have a great weekend. Thanks for listening, and bye for now.